Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got two of the key members from DMG Blockchain Solutions back on the channel to give us an update on this Bitcoin mining company. Before we get into it, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of DMG, what you think about their immersion cooling strategy coming up this fall, and your outlook on some of these smaller cap miners moving into next year's halving event. Now with that being said, let's get into today's interview. Okay guys, so that's right. We've got the dynamic duo from DMG Blockchain back on the channel. This team has already been on to answer some questions a few months ago, but we wanted to invite them back, both Sheldon Bennett, who's the CEO, and Stephen Eliscu, who's the COO, to answer some questions and really give us an update on their business. So guys, thanks so much for being back. We really appreciate the time.
No, thank you for inviting us back again.
You're most welcome anytime. So for first things first, for people who've maybe missed that initial video, I know DMG is slightly less covered than some of the other miners. Can you give us a quick background on your company, your operations, where you're based out of? Just kind of a high-level summary.
Sure. DMG is a public company. We are traded on the Toronto Stock Exchange under the symbol DMGI, Toronto Stock Exchange Venture. DMG started in 2016 as a private company. We went public in 2018. We own a facility in Christine Lake, British Columbia, which is just north of Spokane in the US. Our facility is a 30,000 square foot building. Inside that building, we run 36 megawatts of air cooled, which we're converting to immersion cooling this year. As well, we have 33 acres, and the 33 acres outside of the building, we are installing another 36 megawatts of containerized mining. That's not started yet, but it's well on the way of being installed. On top of our crypto mining business, which we call our core business, we have something called Core Plus. Core Plus is based off of our Blockseer acquisition. Blockseer is a technology company that we bought in 2018 in Silicon Valley. The Blockseer main product was Blockseer Explorer, which was a block explorer used heavily by law enforcement. We've taken that product and expanded it over time and created Wallet Score. As well, we created multiple pools, Bitcoin mining pools. From those Bitcoin mining pools, we've also created technology called Petra, as well as clean block mining, and we also have created wallet technology. So we are considered a Bitcoin miner, but we also consider ourselves to be a software company, and we are fully integrated with the Bitcoin blockchain all the way up to the transactional side of pools and exchanges operating with our software.
Yeah, let me add to what Sheldon said. So if we're just to give some idea of our just financials for the first part, our first 9 months of our fiscal year, which begins October 1st, we had 22.3 million of revenue. And on that revenue, we had 23% operating margin, less depreciation and stock-based comp. That's a good proxy for operating cash flow, we believe. We have on our balance sheet, as of the end of the June quarter, we have 509 Bitcoin and a total of 22.4 million of cash and Bitcoin in value and 91 million total in assets. So also in terms of our hash rate, we have approximately an exahash of nameplate hash rate. We've reported less than that due to heat issues through the summer, but we hope to recover here as we go into the fall.
Yeah, I saw those numbers in your recent press release there, and I'm glad you added them in, Stephen. We're going to talk about some of those heat issues in a second here, but my second question, and kind of a nice segue actually, I know you guys have differentiated yourself both in terms of revenue opportunities and some of the verticals you participate in. You mentioned your Core Plus business division. You alluded to some new software. You hired some new developers. What should we think about in terms of the business? How have you differentiated yourself from the pure play miners in this space?
Yeah, that's a great question. So mainly what we've done when we looked at crypto mining is, as a Bitcoin miner, you only make a Bitcoin once, and then you either put it on your balance sheet or you sell it for cash for operations. And we kind of looked at the rest of the market and said, why are we only interacting with the Bitcoin once when it's generated? It seems a bit silly when we have a lot of technology and knowledge around the Bitcoin blockchain, especially with our acquisition of blocks here. And so we started a few years ago on a strategy of how do we make transactional revenue from the Bitcoin blockchain. And that's really looking at, how do we build a block at the pool level? How do you inject transactions, which, as you may know, we've done some of the largest transactions on the ordinals front as well. How do we continually get transactional revenue? So just like an exchange makes some percentage off every time you want to buy and sell Bitcoin or change Bitcoin to other cryptos, we started looking at how can we get into that business as a miner. What's a core, technology that we know we can control, we can manage, and we can monetize. And this is how we really started our Core Plus software side.
Gotcha. So there are a lot more layers to this onion than the pure play miner that you see with some of the others, eh?
Definitely.
And Bryce, I want to highlight last night we did put out a press release that we brought in Lawrence Strong as a strategic advisor, and he was Chief Compliance Officer at Tetra, which is Canada's only qualified custodian. And we're really looking forward to his expertise helping us in terms of continuing to build out our Core Plus strategy.
Yeah, I saw that press release this morning, actually, right before the interview. So congrats on bringing him, and I think that'll be a strong addition to the team, like you mentioned there. So next question here, guys, actually came from the viewers based on our last discussion. You've mentioned the NFT opportunities, Ordinals, TerraPool. Can you give us some details in terms of revenue mix and kind of your future growth plans? How should we think about these other components? Is it going to be a main part of the business, or are these always going to be complementary?
So, in the world of Ordinals and NFTs, it really shot up quickly. We did a lot of great NFT work, or Ordinal work. As we've quoted before, DGOD was the biggest one we did, from viewership and people understanding who we are and what we're doing in this area. From just name recognition, we were approached by Bored Ape Yacht Club because of our clean energy. It was the only way that they could put out an NFT onto the Ordinal blockchain or the Bitcoin blockchain without the carbon that's associated with the Bitcoin blockchain. And so we were happy to work with them. It's still going on. There's a lot of Ordinals going to the Bitcoin blockchain. We're not going after a lot of the small ones. Our focus has been more business to business. So we have multiple agreements with Ordinal companies that want specifically clean energy Ordinals or large Ordinals up to 4 megabits. So that's kind of been our marketplace, and that's what we use TerraPool for. And we have had some great revenue from that. We think that's going to continue. We think it'll pick up, hopefully a bit more in the new year. It really depends on, what artists want to do, where the Bitcoin blockchain is going, what's happening in the other blockchains, with Ethereum and the other chains that are associated with Ethereum. But we're seeing sort of a return to what we saw in the summer with a lot of inquiries. We think that we're going to be putting out some more large Ordinals soon. So stay tuned for that. You'll see some more press releases about that. But we are excited about that piece of business. But you do have to remember that the Ordinal business is a business that kind of happened by accident. We were actually preparing Petra, which is our business where we can inject transactions into our block that we're creating for the Bitcoin blockchain. We were preparing that for financial institutions to be able to put transactions into a known pool with known actors, with KYC, with OFAC compliance, and Ordinals came along. And just on the Petra side, we are getting very close to testing that, live on mainnet with a Canadian exchange, where we can actually prove out that there's a market for carbon-free, OFAC-compliant transactions happening on the Bitcoin blockchain. So we're excited about that. So whether it's Ordinals or whether it's working with institutions that are interested in the technology, either way, we see this business growing over time.
So investors should really think about this as a spectrum of opportunities where we utilize the fact we have a carbon neutral pool, and generating blocks to be able to fill those blocks with different types of transactions, whether they be 4 megabyte ordinals, or they be other types of digital artifacts, or they be transactions from financial institutions. So that's the best way to look at it, is essentially TerraPool provides a supply of carbon neutral blocks that provide this opportunity, or I should say this option, for those who have not had the option of ensuring that they can place whatever they're placing on the Bitcoin blockchain without adding carbon.
Yeah, it's fascinating stuff, and you guys really are on the leading edge of that. I know as I read these press releases and stuff, it's just continually evolving, and you're definitely right. We've seen that kind of ditch-to-ditch mentality with the general public with NFTs, but I would agree that I think that's going to come back with time, and it is a huge opportunity to be prepared for. So next question kind of comes back to the core business, I suppose. I think in August you said 46.7 Bitcoin mined. And that was limited or restricted because of some heat issues at your location in Christina Lake. My neighbor actually has a cabin there. He always says it's the warmest tree-lined lake in Canada. So I understand the heat issues, I guess. But can you give us an update on what that meant, and if going into the winter months or fall here, if heat wasn't an issue, what you think you could get from that location?
Yeah, unfortunately, there was a lot more heat than we expected. I think we had 2 heat domes over the summer, which an early one too that we didn't expect. I don't think we ever had a heat dome before in Christina Lake. Before the season started, so the warmer season started, we did bring in a lot of extra fans and water walls, sort of learning from year to year how much cooling we need. Unfortunately, with the fires, with the heat domes, just with prolonged heat, it was a lot more than we expected. As well, we found the S19s, whether they're XPs or J Pros, just aren't as strong as previous models for dealing with heat. So they just don't handle the heat as well as like the S9s and other models in the past. The S9 is still one of my favorites, even though it's so inefficient now. It's still a great workhorse. It's just too bad it's no longer relevant for Bitcoin mining. But we do, as we said, earlier, we do see that this heat issue not going to be around for us next year as we convert over to immersion cooling in our building. We will still have air-cooled containers outside. Those containers will have, water curtains and fans, and just will be spaced out in a way that even when it's 35, 40 C out, we don't think we're going to run into near the heat problems that we had in a building. So we're hoping, fingers crossed, that next year we won't have as much of a change in our hash rate during the day. It does come back at night when things cool off, which is nice. So it gets really hot during the day and then cools right off. But we're hoping that next year is a good year from a heat point of view, especially with our immersion cooling installed.
Yeah, great. We also have talked about our goal to get in excess of 2 exahash, and we are looking to decide what's the best way to acquire additional equipment and to be able to do that most cost effectively, especially with a lot of uncertainty going into the halving, that we have to be best positioned from an efficiency point of view as well. Our efficiency, just under 29 joules a terahash, is competitive with others. We got to see, we see a lot of our peers, and they're in that same ballpark as far as numbers. But next year, post-halving, it's going to have to be sub 25 joules per terahash, and probably even a little bit less than that to be competitive. And we get that, and that's what we're looking as we build our fleet and leverage the fleet we have. That's where we expect to be in that ballpark as well.
That's a good point. When we're looking at capital and capital spend, it's really a tough time right now to figure out what you should do. Having the capacity to add another exahash, should you be buying XPs and J Pros? Should you be waiting for the new miners that are coming out that are sub 20 joules per terahash? So we're really kind of looking at that, trying to make the right decision with the halving. We don't know where price is going. We don't know where difficulty is going. We do know we're going to have to be more efficient. We do want to take advantage of our investment in immersion cooling to become more efficient. So it's tough, and we've always sort of told our investors that we've been good stewards of capital. We do have over 20 million in cash and Bitcoin. We have only $1 million in debt, and that debt's related to financing a building we have, not to crypto miners. And so we're trying to keep a strong cash and a strong balance sheet going to the halving, because we really don't know what's going to happen. And as with anybody, having no cash going into the halving is a really scary thought. So we're being a bit cautious. At the same time, we are looking for opportunities, because miners are at an all-time low in terms of cost, and looking for opportunities to find an exahash in the most capital effective way, as well as just make sure that we're set up and ready to take on whatever the happening brings to us and other crypto miners.
Sure. Yeah, I meet with a lot of the CEOs on this channel, and everybody's kind of got that same uncertainty or trepidation with the halving next year, and it's super unique. There really aren't any other industries where your costs essentially double overnight for an arbitrary date like that. So super interesting time. Appreciate your comments about the heat dome there. Obviously better for wakeboarding or boating than Bitcoin mining. Just out of curiosity, Stephen or Sheldon, what is kind of the magic temperature? When does it really start impacting the gear in terms of Celsius?
So when we get above 15 degrees Celsius, we start to see a little bit of a change. When we get up over 20 is when we really start seeing changes. So, and that's ambient. So normally when we hit 15 degrees Celsius, we turn on the water curtains. That brings it down about 10 degrees and brings us back down. So, a 20 degrees C outside is really a 10 C inside. So it kind of works like that. And so, we really feel the effects when we get up to the 25, 30, 35 is when we really feel the effects.
Makes sense.
And just the way that our building sits around these mountain ranges, so we kind of sit in a bowl. And so that second half of the day, the morning's quite cool and the evening's quite cool. It's the second half of the day that really hits us hard until the sun gets under the mountain. So that's one of the downsides of having a beautiful location, is that we're sitting in this bowl that cooks away. It will be good, and we've said this before, and we've done the work on it. It's just we've been a bit careful with capital, but it will be great for our planned expansion into solar, and having solar to power us. It'll be great for that point of view, that we'll have a lot of hours of solar. But right now, it's not the best. It's unfortunate that we have this for a few months.
Hey, you can't win them all, but the next question, it's very relevant to the discussion. The immersion cooling, I know this is a big catalyst for you guys. It's been on the roadmap all year. We talked about it in our last video. So can you tell us a little bit more about what immersion enables? And I like that water curtain analogy of basically a water curtain's 10 degrees. What should we think of immersion in terms of an impact on the temperature?
Well, immersion, the great thing about it is that we can control the temperature a lot better. So the way that we've designed our immersion is you basically take a heat input that goes into the fluid, it goes into a dry cooler, and the dry cooler, you size it large enough that you can sort of dump that heat outside. So for us, what we see is it's something in the neighborhood of 15% drop in power consumption for the same amount of hash rate. And we did a study on this a little while ago with a third party that sort of proved it out. It wasn't just all excited about immersion. We actually had somebody else that was specialized in energy conversation to do this study for us, just to make sure it's not us sort of being biased to wanting immersion. But just that the power savings there as a large power user is immense. And then the control, we can just increase or decrease the speed of the fluid to take the heat away. We've sort of oversized the dry cooler because of the heat issues at Christina Lake. So what it gives us the ability to do is sort of, one of two things, and Steven's quite good at explaining this as well, but one thing it gives us the ability to do is to overclock. So if we want to overclock immersion miners, that is a great way to be conservative in our capital, because we can use less miners to get the same hash rate. Overclocking doesn't give the best efficiency. You don't get as, it's more joules per terahash, But depending on the price and the difficulty, sometimes it's quite worth overclocking to get a higher hash rate to bring in more revenue, even though your power consumption will be a little bit higher. The other side of that is Immersion is also really good for underclock, where you actually put in more units and you have like more silicon working at a better efficiency, costing you less in power for your hash rate. And so you need more units to do that. And so we've designed our tanks to expand to the maximum units and also to be able to shrink down to the minimal amount of units if we're overclocking. And this gives us a lot of power from the point of view that, if Bitcoin price is low into the halving and it looks really rough, instead of being a fleet that's running at 29 joules per terahash, we can bring it down to 25, maybe 24, so we can really squeeze down the amount of power needed to create hash. Or the opposite, if Bitcoin price shoots up to $60,000, $100,000, and you really want that hash rate on, we can overclock all of our units, and they won't be running at 29 watts a terahash on average. They'll be running at 32 or 33, but we'll get a lot more hash rate out of them and a lot more revenue.
Yeah, and that's and that's where I think there's a lot of misunderstanding about immersion. It's not so much only about just putting the miners in fluid and having them run more reliably, because you don't have fans. And we've seen the S19 series certainly has had its challenges across the industry. But it's this idea that the useful life, you can, especially if you're talking about a new generation miner, you can start with some modest overclocking, really maximize maximize capital efficiency. So if the cost per hash is, let's say, $20 a terahash, and you overclock it, effectively can become $17 a terahash or something like that if you overclocked it 15%. So you can get some capital efficiency benefits by buying more state-of-the-art miners, but doing overclocking to have essentially the cost per hash be more competitive. And there is a give up in margin, but as Sheldon was saying, depending where the price of Bitcoin is and network difficulty, that can work to your advantage. But if you kind of say start with state-of-the-art miner and over its life go from modest overclocking to some modest underclocking and potentially move agilely within that over the life, then you really are able to get better capital, just a better capital cost than you would otherwise outside of immersion. So there is this misnomer that immersion is just about making the equipment more reliable. But it doesn't matter if it's an S9, a reliable S9 nobody cares about because it obviously can't make any money. And so we're really talking about this useful life for the equipment, extending that, and for the capital costs of immersion. And there are third parties who are offering equipment on the market for about $100,000 a megawatt, excluding the fluid and the medium voltage transformers. The cost of the equipment is not that much, and these are long-lived assets that live like 10 years. So on your income statement, they're rounding errors relative to the miners. But the miners where they may have been useful for 2 to 3 years now can, let's say, be useful for 3 to 5 years. And for us, that's really the big win with immersion.
Yeah, I'm glad we spent some time on that because, to be honest, when I think of immersion, yeah, it's more efficiency cooling, but it sounds like it opens up a lot of more optionality, capital optionality, and equipment lifespan. Hey, that's the takeaway here?
Yeah, exactly.
Great. Okay, well, and I know you mentioned, Sheldon, solar. When are you guys thinking to do solar power there?
That's a good question. I mean, we have a lot on our plate just right now with, expanding out in the backyard, putting our containers in, and also converting the building to immersion. So I don't think that we'll get onto that until sometime next year. There's a lot of work to do just on the mine itself, but like I say, we did do the engineering. We did work out, how many megawatts of power we can generate there. I guess the one thing by delaying it a little bit is that the technology of solar power panels seems to get better every 6 months. So every 6 months or so, we will go looking at the panels that we wanted to buy, and they become more efficient and they cost less money and they can do more watts. So I guess that's a good thing. I mean, it's not a good thing from the point of view I'd rather be generating solar power today, but we have to look at the core business first, which is keeping the hash rate up and expanding that hash rate. And then second to that, we're going to look at diversifying out the energy from taking grid energy to our own solar energy for consumption.
Gotcha. Just like big screen TVs, they get bigger and they get cheaper every time I go to Costco. Okay, now next question for you guys. The Core Plus side, I saw in your recent press release you hired some new developers. Is that to support existing Core Plus operations, or is there something new getting injected there with these new additions?
Steven, do you want to take that one? I'm hogging home.
Yeah, well, I was just trying to think through. I mean, I think just the fact that we just hired Lawrence to help us go after new areas to expand what we're doing in our Core Plus strategy should be a signal in terms of that. And we are going to hire very judiciously. So we've said we're not necessarily going to go on some hiring spree. We're going to still manage our operating expenses very tightly. But at the same time, we're going to add in talent that we haven't had in the past, and that will allow us to do new things. And both Sheldon and I are going to be very careful as to how we spend and how we execute on our roadmap. I think one of the things to understand is people look at our Core Plus business and say, wow, you're a Bitcoin miner and you want to do all these things. But they're all very focused around the infrastructure related to adding transactions to TerraPool and what we need to support financial institutions and others who want to be able to send transactions on and without adding carbon to the Bitcoin blockchain. So it's all around that. We are not going to necessarily become a full service anything. It's very much very specific around that. So when people look at what we're trying to do in Core Plus, they should not necessarily say, oh, they're trying to essentially build out a full service one-stop shop for financial institutions or for those who want to have ordinals inscribed. It's actually quite the opposite. It's how can we work together, and what is it that you need in terms of infrastructure to be able to get transactions to us? And that's a very different problem we're going after. And that will allow us to continue to run a rather lean software shop.
Sure. Yeah, I'm trying to tease some answers out. I know you guys are very disciplined with your money, and to see these new additions and all the excitement there on that cutting edge side of the business, I know there's probably some good stuff to come. And Sheldon, do you have something to add there?
Yeah, I just wanted to add, to Steven's comments, the area we're going after is very specific. It's also very enterprise. And so the software that we're creating is not, something that you create on a weekend and push out for your friends. This is stuff that needs to be relied upon by institutions. And so the team is pretty disciplined in ensuring it's all put together. I think in behind all of that, in our software development, we are sort of midway through our SOC 2 Type 2 compliance. And so that's going to sort of show our commitment to building robust software that can be relied upon by others. And so that's a big part of it. And all of this just takes some time. And, I always kind of go to the software guys, like, how hard can it be to code this out? I mean, I see these things on YouTube, all these people using AI to make software in a day, right? Why can't you guys do this in a day? But it's much more complicated than that. And then, part of what we've been trying to do with our software is not make it stand alone as its own little piece of software. We've been trying to integrate them all under the Blockseer name and all the code together, so all the different databases work together. So our pooling software works with our Helm software, which works with our Petra software, and it all kind of links together, which works with our wallet software. So it's not like you're jumping from place to place and you kind of lose time and you have different code putting it all together. It's all very streamlined together. which makes it run much more efficient and makes it easier to manage and scale.
Just to give you some more specifics, because I know you're like looking for something specific that we're going to do. And I think what we've said in our investor deck, which is on our website, that there with our Core Plus strategy, there are really 4 areas: the pool, the what we call clean block mining, where we could also not just filter out bad actors, but inject known good actors, transactions from them. And but we've also talked about supporting exchanges through a relationship with Bosonic and custodial wallet solutions. So those are, if we're going to be announcing something new, it would be in those 4 buckets.
I love it.
I don't know. Are we going to announce our work on blocks here anytime soon? I'm teasing Steven a bit because he's running that project.
Yeah, just to go to Sheldon's point, we also announced, what we said on our earnings call is we are putting some effort to revive the original Blockseer product called Blockseer Explorer, which allows you to explore the Bitcoin blockchain, and actually it has support for Ethereum as well. And so we are putting resources there, but that's essentially a tool within this ecosystem.
Great. Well, we got some nuggets out of you guys. That's what I try and do here, but I know you can't say too much. But I'm glad we spent some time on it, because you're right. From a helicopter view, it may look like, wow, they have so much going on. They're spreading themselves thin. But when you start to look at each one of these verticals, they're very closely integrated, correlated. They build upon each other, complementary. So I'm glad we kind of explained that or flushed that out in a bit more detail. And then the final question I had for you guys, I wanted to confirm the debt level, which I think you did, Sheldon, at $1 million, which is great, obviously, financial flexibility there. Should we anticipate any change in your debt strategy or your HODL strategy moving into next year?
Not really. Our debt comes up in May for renewal, our $1 million. So we'll look at renewing that or paying it out completely. We're not too sure what we'll do yet. We are set up and have talked to different debt providers, so we could go get more debt. Obviously we would do that if we, made some type of decision on what we would do for a new fleet to add another exahash to our existing fleet. But we haven't made any decisions on that, but we did do the work to find debt providers at what we believe are favorable rates, especially compared to rates that used to be in the past. They're nothing like that, so that's great. Having such a large HODL also gives us favorable rates. It's a great asset to secure debt with, so we're pretty happy about that. We traditionally are not a hodler. We've just been really good over the last couple of years in our operations, so we just don't need to sell as many coins to run our operation as we generate. So we've slowly worked our way up from a few hundred to over 500, and we'll continue to do that. We try to keep a buffer of cash and coins that is reasonable. We keep the coins mainly because if we're making a Bitcoin at $25,000 and you believe that the halving is going to have an effect, or you believe that one of these ETFs is going to have an effect, we'd like to have some coins around to be selling them at $50,000 instead of $25,000. So that's kind of our goal, is to try and maximize the value of that HODL over time. I don't see us holding it forever. We're not, Michael Saylor. We're not going to do something like that. We're busy trying to build a business that is vertically integrated, where we believe over the next few years we'll make just as much revenue on the software as we make on the crypto mining side.
Yeah, and we did say on our earnings call that we have made progress with regards to raising debt, but I think that's going to happen in conjunction. Being able to raise additional debt will happen and exercising on some potential relationship some arrangement that we get is going to be based on us moving forward with a new fleet or additional fleet. So we're going to be very careful. We're not going to just raise a bunch of debt just because we want to add some cash to our balance sheet. We're going to put it to work if we do raise that debt. So, and the amount of debt would be modest relative to our total asset base.
Great. Yeah, exciting stuff, you guys. There's a lot going on. Immersion, there's new fleet potential, there's solar potential, there's software. I always love discussion with this company. You guys are welcome back anytime, so I'd look forward to hearing these updates next quarter. And I just wanted to thank you for your time today and hand it over for any final thoughts there.
No, thank you. I'm glad to be back. I watch your show. I watch all my peers on your show, so it's great. Great, I learn a lot as well, and we're happy to come back anytime you want us.
Yeah, Bryce, really enjoyed our time today. Thank you.
Great. We'll see you soon, guys.